What's up, everyone? In this week's episode, we talk about multiple topics. We talk about schools being closed, the states that are trying to reopen, and we talk about the importance of buying local. Hope you enjoy the show.
Welcome to the Money Huddle, a podcast that explores financial topics for families and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Planners Alliance. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Planners Alliance may maintain positions in securities discussed on the program.
All right, we are back in the saddle. What's up, Mr. Marinell? How are you doing?
Man, your hair's looking long. I haven't seen you without a baseball cap in the last few episodes.
This hair's getting luscious. What can I say?
Hey, listen, I've self-cut 2 times.
Have you?
I'll fade the sides, but I won't.
You won't touch the top?
No. I'm
No.
not brave enough to do it yet. Though I need these businesses to open back up soon, man.
I'm standing in solidarity with my barber right now because I'm just like trying so hard to not get the clippers out. I have clippers, and every 2 or 3 days I look at Elizabeth and I'm like, so can I cut my hair? And she's like, no. Yeah, man. So what's been happening on your neck of the woods? Anything exciting to share in your quarantine life?
So for South Carolina, school is officially canceled for the rest of the year. That was the big news in our household yesterday. My first grader was fine with it. My fourth grader was a little sad.
Was she?
So I think she misses seeing her classmates and being involved in school, social aspect of it. So it wasn't received with open arms at our household. So good news to the teachers out there. You're missed. You're loved and you're missed. And so, for us, it'll be an interesting challenge to get through e-learning this year.
I'm curious. What are your thoughts on these states that are trying to open right now? I mean, we got Georgia that's trying to open up, and a couple of other states are laying out the groundwork. I mean, what's your initial thoughts on it?
I mean, it's interesting. So I scheduled to meet somebody briefly. I had to exchange something with another gentleman, and we decided to meet in the Home Depot parking lot down locally in our area. And I thought, it won't be that crowded, right? It'll probably be easy for us to spot
Home Depot.
And Home Depot. And I pulled in there, and Michael, you would have thought it was 4th of July or something, Memorial Day weekend, because there must have been 300 cars in the parking lot. So I get it. People are ready to get back out, and whether that's safe or not or smart or not, I can't comment on. It sounds like it's probably going to be a little bit risky health wise, and I certainly don't want to get the coronavirus. I know a few people that have had it and they don't want to have it again. And for the feedback I've had from people that have had it and have lived through that experience, it's not something you want to take lightly. But at the same time, I think 30, I was looking at your optimistic posts on Twitter, right? And you're up to day 40.
40 days.
40 days. 40 days since the thought triggered that we needed to start having some optimism. And we've been home that long. And at some point, people are ready to go, and they're ready to get back out there. And I hope it doesn't spike cases, because the one thing we don't want as an economy is that we have to go through a full shutdown again in another month or two. So I'm cautiously pessimistic about returning too quickly.
One of the quotes that was given out a few weeks ago, when I would say the economy discussion really started to come home or come forward, was, we can't let the cure be worse than the disease. And of course, a lot of people have circled the wagons politically to try to defend a viewpoint on that. But that's also something like we have to start really talking about is, you see the collapse in oil prices, and I still believe a lot of people don't really understand there was nothing inherently wrong with the oil industry. Sure, some of them have bad business models. Sure, some of them have, they're over levered with debt. But we literally stopped demand almost overnight, and they're still supplying oil, but there's nowhere for them to go. So the prices are just have plummeted, and I think that's one tangible piece of the economy that everyone can see. But there are all kinds of other things brewing underneath the surface that most people don't recognize. What's your take
Hey,
on
look,
that?
oil is a great place to dive into because this week saw I've never seen oil futures contracts go negative and go negative at the pace that they did. That was startling to
Yeah.
me to see that you could actually have to be paying somebody to take your oil. Oil is on that supply and demand convergence for years because one, they're getting better at drilling for oil, right? They have less expensive ways to do it. We've talked to people that have been involved in some of the drilling aspects, and
Mm-hmm.
we know that they can target wells better. The technology allows them to have a much higher percentage of hitting oil, so they don't drill dry wells as often as they used to. Their pinpoint accuracy on where they can hit in the ground. So one, they've gotten better at drilling, and that's increased the supply. And on the flip side, we've gotten better at conservation. So whether that's through fuel efficient cars, homes, businesses, it's this it's this dual edged sword, right?
Right.
Where they're better at drilling and supplying it, and we're better at conserving it. And at some point, you have more supply than there is demand. And right now, they're running out of storage. They're running out of places to put the new oil, and that's why you saw those futures contracts go negative. It's actually there's nowhere to put it. We're not filling our gas tanks. My neighbor across the street has a great saying. He goes, I'm getting 3 to 4 weeks to the gallon
That
right
me
now.
too.
It is true. It's like I have to force myself to find something to do to go drive my car every week. I can't remember I can't even remember the last time I put gas in it. It's been weeks.
Right.
So if that's if our experience is normal across the country, then yeah, we're in a big problem with some of those utilities.
I think, just the idea of some states trying to open, getting people out on the road, even just feeling comfortable making smaller trips, that will help. That will help. There's still going to be a glut of supply, I think, for a while, but at the same time, I think there's got to be a point. There's a saying. It's like the timing's never perfect for just anything. I think there has to be a point mentally where folks just say, okay, we gotta go because we can't just stay hunkered down and bunkered forever. True vaccine is going to be months and months out
Right.
before it's available, and that's not even to guarantee that a vaccine is actually going to be a cure. It might just be, like similar to like a flu shot where, hey, we'll try to tamp down this thing and prevent you from getting one strain of it or a severe
Right.
strain or something similar.
If anything, what we're seeing is this COVID-19 self quarantine, stay at home, stay in place, may be the catalyst to really wipe out the businesses that are just maturing out of existence anyway. So,
Maybe.
for example, we're seeing Macy's, just like I'll take Macy's for example, right? A retailer typically associated with a mall.
Hmm.
Macy's stock is trading at $4.09, so just under $5 a share.
Right.
I was thinking from a 52-week high of $24 a share. So think about this. What would I go and buy at Macy's that I couldn't buy from a number of online retailers, right? And I hate to say that, but is there really anything that I'm shopping for there that I couldn't buy from Amazon, Walmart? I mean, a number of online
Or
retailers.
you could buy from Macy's online. The huge brick and mortar footprint is becoming more and more irrelevant for a lot of these stores. I mean, I think about, in the past couple weeks, several stores. One of them I can think of is Dick's Sporting Goods, Academy Sports,
Yeah.
Best Buy. All of them basically are saying, "Hey, you can order and just drive up, and we'll bring it to you." And I'm thinking to myself, like, they're making almost the case for why that huge store doesn't necessarily need to exist
Yeah,
any longer.
that's kind of my point. This may advance the inevitable that some of these physical retail locations are unnecessary. How that affects commercial real estate is problematic. We're seeing some real declines in real estate related assets. Whether there's a few tickers we could throw out there that we're watching that are going through a bit of a downturn would be that would be pleasant, right? This is sort of a revitalization. What's going to happen here long term? I think you're going to see that in the energy sector. I think you're going to see some of the smaller businesses that are debt ridden, that are not profitable at these levels of oil price, probably just be consumed by larger entities or file for bankruptcy. We saw this week Neiman Marcus is preparing to file for bankruptcy. They're looking to cobble together $600 million just to survive the bankruptcy proceedings, and they're going to done. And look, and I think the statistic was $4 billion of debt that they were carrying at this point that would have to be restructured through the bankruptcy proceedings. That's problematic long term. I think that we were on that course anyway, right? That those retailers were struggling, that they were suffering. This 40-day plus shutdown has advanced that to today, right? They're going to have to deal with their future this month, right? And there's no time. I think the clock's running out on some of these businesses. However, that means that there's openings in new areas that have not existed before, and we're
Sure.
seeing that a lot of some of the research I've been kind of digging through is finding where businesses spending money, and they're spending more money on technology right now. And it makes sense, right? I mean, look where we're at. We're on a podcast platform we never even needed to explore, 40 days ago. And so there's going to be new areas pop up that can help fill the void. But some of these legacy businesses are just struggling, and there's maybe no turning back.
That's a great point, and it's a great transition point for one of the main things I want to talk about today. Because in the days and weeks coming ahead, there's going to be more and more conversation about recovery and what
Mm-hmm.
recovery can look like, and we're hoping it to look like. It definitely seems from the data that's coming out that most of the curve with new infections is flattening out. And in some cases, we're seeing that rate even start to fall, where it may suggest we're on the beginning of a downward slope. They were coming out, I think, yesterday in the press conference, and they talked about sunlight and heat and humidity killed the
Mm-hmm.
virus, which is a great thing because it's about to be May. The southern states especially are notoriously hot during the summertime and humid, but the entire country, will be coming into the warmer months of the year, which may give us, just if anything, it may just give our medical professionals and the people studying this thing time to catch their breath and just to gear up and figure out some ways of treatment. Doesn't erase what we've already endured, but it may give us at least a respite to try to reset and recalibrate. That being said, one of the things that people are going to begin discussing is recovery. And I saw a great thread on Twitter the other day, and it was by a gentleman up in Indianapolis. His name is Pete the Planner, and he articulated a concept that we talk about a lot. I hear it spoken a lot, and it's the concept of buying local and why buying local is so important. But I don't think people really understood how important taking care of local business owners truly is until we are faced with something like this. And so he articulated out so many different things, but the idea is to trap money in your local economy. And before I explain any more, I want to hear just your initial thoughts on
So,
that concept.
so arguably, right now, that's just lip service because every day this Amazon truck is flying through the neighborhood. And we
Mm-hmm.
might have that spirit that we want to support our local businesses, but that requires principle and direct action to force yourself to not take the easiest path to purchase something because it's becoming harder and harder to not just fall back to that one known entity, right? Whether that's Amazon, wherever you're most comfortable shopping, and just buying everything. I'm seeing Sam's Club deliveries to the doorstep now. I'm seeing, these big box retailers are primed to take over a big portion of these small businesses that are vacating, and I think it's going to take a an intentional action to continue to buy local, because the natural instinct is to just order from Amazon. It's simple and it's there in one day.
That is a wonderful point, and I'm glad you said intentional action because that is exactly what I'm getting at. We hear a lot of times our local leadership, and I know this from personal experience. A lot of people will say buy local, but yet their wealth management will be at a major Wall Street institution instead of a local advisory firm. And I say that, I mean, and I mean no disrespect, but I mean, you'll say go buy local, or we're very local minded. We believe in developing this area, but your dollars are going to the biggest institutions who've got big brand recognition, but aren't going to be sponsoring any little league teams. They're not going to be sponsoring the local university. They're not going to be, donating money to your kid's charity. Those types of things. But I think about, that's one example. But at the same time, just how intentional we all can be with different things to try to take care of our local entrepreneurs and business owners that spend their dollars in the community. And so the example that that Pete gave, and I get it, it's hard because convenience is a real thing. We're all busy. The ability to have something delivered to your doorstep is a tremendous convenience, especially when you're being told you can't leave the
Right.
house. But I also think about, there are two, coffee shops that I really like going to in Rock Hill. One just opened up a physical location, Forte Legato, here on Anderson Road in Rock Hill. There's another one, Knowledge Perk, which is in Old Town Rock Hill, and I enjoy both of those places. And yet they're struggling and throwing punches and trying to survive right now. And so many people are just driving to Starbucks and driving to Starbucks and driving to Starbucks. And I get that Starbucks is convenient, but at the same time, like Starbucks doesn't spend their money in the community like Nicholas is going to spend his in the community, or Ryan's going to spend his money in the community and be active in the local business environment. And so that's what I'm trying to help people understand is exactly what you said. We talk about it, but now it's time to be about it.
Mm-hmm.
Because coming out of this thing, what you're going to see is a lot of businesses aren't going to make it because everyone just flocked to what was the easiest thing. No one took care of the local business owners. And it's really unfortunate because we all know that, we should buy local and take care of our people, but you think about the ripple effect of those employees that work for that local business. They live here, they spend their money here. The business owner, he lives here, spends his money here. But when they need supplies, or maybe they're also buying supplies or wholesale from another local business.
Mm-hmm.
And so that whole ecosystem, really needs to be protected. Otherwise, we talk about, how being anti-fragile, we're going to get more fragile because we're not going to have anyone with like local roots in the ground. We're going to depend upon Jeff Bezos of the world, the Bill Gates of the world, to be able to come to our rescue when we need something. And it just may not be simple in the future. What if technology is the next, the big thing that gets hit next time?
Right.
And, the internet's having trouble and we can't one-click purchase. Well, we can't go buy our coffee because there's no coffee shops. We can't go to the store and just order pickup.
Well,
So
I'm affiliated with a.
shut me down.
No, no,
Take
no,
take the other
no,
side.
no.
Argue
Well,
with me.
I'm a part of a business networking group locally, right? And there's 42
Right.
of us, business owners, local businesses that we get together every week, and you have to look at those other business owners every Thursday, right? You know what they do, you understand what they do, how they serve their clients, and you do feel an obligation to help support them. And that's the type of action I think you have to take to be serious about, how do you change your habit in purchasing. And there's many ways that those, businesses, we support each other through these periods of just unbelievable difficulty. When people can't
Mm-hmm.
travel, you have to think on your feet and pivot and figure out a way that your business can still serve its clients without jeopardizing their health and well-being. And it requires people to really think differently and react quickly to the situation that they're exposed to. But the big picture is there's nothing that's going to stop the train than the shift to the big stores like Amazon and Walmart taking over market share. That's the reality. I think we can do our best to help support one another locally, and we should. But to think that, it's my opinion, I think that ship has sailed,
Mm-hmm.
and I think they're going to continue to be expanding and growing. Now, can they bring local businesses here? Can they help? Are there going to be additional warehouse facilities, in-store facilities? I mean, where Amazon goes as a company is anyone's guess, right? They might have physical stores in 10 years, for all we know. I have a point on the recovery. I want to make. I've got a little bit of a gripe with our FinTwit media.
Okay.
Okay, I
All
want
right.
to, fire off something here because this struck me this week and it bothered me a little bit. Okay, I
Okay.
saw a tweet from one of the FinTwit group. That's financial Twitter, talking. And here's the tweet. It said 26 million people filed for jobless claims since March 26th. S&P rose 15% since that time. So basically, kind of throwing shade at the S&P
I
500.
think I know
Yeah.
who sent that.
So it's one of those tweets that I saw that headline across a lot of different news um, uh, sites too, though, where basically it's like, how can the S&P 500 rise when we're having record unemployment and people are struggling so mightily, right? This is truly a once a lifetime, I hope, scenario where we have, what, 26, 25 plus million people unemployed. It's really scary, right? And
Mm-hmm.
the part of that that's always missing from the conversation that people fail to grasp is that statistic I'm going to read off to you now. If you look at the preceding month, so February 20th of 2020 to March 20th, 2020, the S&P 500 fell 31.5%. But at that time, we had record employment. The unemployment numbers didn't really kick in until March 26th, right? That following week. So there's no headline saying, the S&P 500 dropped 31% in the greatest economy, like with record employment and the lowest unemployment we've had, right? That happened. So we
Mm-hmm.
forget that the market moves ahead of the economy and that it's going to fall before the real data starts to surface.
It moves in
It moves
anticipation of what's about to
it moves in
happen.
anticipation, right? We said it a couple podcasts ago. It skates to where the puck is going, not where it is today. And so it's easy to kind of throw those softball, look at a woe is us kind of mentality when really it's like we
Mm-hmm.
lost 31% at a record pace. And at the time you're going, why is this why is this happening, right? What's happened? The data hasn't, and it's just the data hadn't surfaced yet. And so I just think it's one of those, it's just kind of it's a little bit of an irritating
It's
tweet.
good
It's
for
good for
Twitter.
Twitter, but really it's like, let's remember what's happening in the market. That the market can recover before we do locally, and we're talking about that, right? Before our small businesses are back on their feet, the market can be recovered because it's anticipating us getting back to some growth. And so I just want to, need to make that point when we're watching daily news and some of the reactions to this terrible economic data, and it is terrible, is that how much of that is already factored in? And if it's factored in accordingly, then we're not necessarily going to see the stock market fall just because that data is now surfacing if it's been anticipated in the preceding weeks. Is that fair?
The other no, it's fair. The other thing that I've been thinking about too is, you know, all the continuous headlines that we've read over the years, that when they're just trying to come up with some type of soundbite or some type of headline. I remember reading about how much cash was parked on the sidelines. You remember
Mm-hmm.
that? I mean, trillions of dollars of cash was just on the sidelines and not participating in the bull market. I read from time to time the number of people that are not actually investing in the market, right? The number of people who actually are not participating, I mean, and I'm going to throw a number out there, and I may be totally wrong. Fact check me if you want to, but like 50 million Americans have no money invested in the stock market, and I just think it's like we continue to try to correlate the market with the everyday American's life experience. And if you're going to argue income inequality and wealth inequality, well, the people in the market, they're going to have a much different experience than the people who have no money invested. And we continue to intertwine those things. And I think Josh Brown, he wrote about something a few weeks ago on his blog, and he was talking about the millions of workers that we have that are still working, still contributing money every pay cycle into their 401k, number of employers that are putting money into their 401k. And I do remember it's been a minute, but coming out of the great financial crisis, one of the things that people were tripping out on was how quickly some of these corporations turned their profit situation around. And like it or not, they shed thousands and thousands of jobs, but one of the most expensive costs to running a business is labor cost. So, what they did was they weren't quick to hire people back. They worked their people to the bone,
Mm-hmm.
but they turned their profits around, which drove, market fundamentals. So it's one of those things where I agree with you. I think tweeting out stuff like that, it's nice to have like a little pithy tweet, or something that you could just kind of throw a shot out there, and that's fine. But I think that if we really want to have the real conversation, we got to stop pretending like the stock market is everybody's experience or the economy is everybody's experience. There are a lot of people who are really hurting right now, and they don't care about the stock market because they don't have any money in the
Mm-hmm.
stock market, And then there are people that are in the stock market that are doing okay, and they're thinking, what a great time to try to buy. How do I get money invested? And to try to marry those two households' experience into the same narrative is really kind of tough to me, in my
Right.
opinion.
So, the last thing I want to throw out there on the small business, path right now is, um, there was an article that said 180 public companies took PPP money, and
Oh, so bad.
that's been frustrating to see how the money has been doled out from large companies that have access to public money already, that have maybe better opportunities to borrow debt at low interest rates,
Hmm.
still put their hand out for loans that really need to be going to small businesses, like you said, locally, that need support, that need this funding now, or they may not be in existence in 60 or 90 days. I thought that was pretty frustrating. Any feedback on that from your perspective, Michael?
Oh, I do, and I'm going to be very careful to make sure I don't say any names of any large institutions. But one of the things that I will go back to is, why does this surprise anybody? This should not surprise anyone. Number one, um, I will tell you, my first thought is that this is the benefit of having an advisor, an advisory team, groups of professionals working on your behalf, because I guarantee you, the minute that these regulations were becoming, before they were even voted on and placed into law, or the rules were made, the advisors to these big companies were on the phone saying, we're going to qualify for this. We need to be ready. We can actually apply. And that, I mean, it's like the rules are the rules. Like, they were able to apply. Now, it was the spirit of what they were trying to do? No, I don't think it was in the spirit of what the law was supposed to do. But that doesn't say that, if you're eligible, your advisors are going to tell you you're eligible, you should apply. Especially with there being forgiveness. The other thing that I would say is, this goes back to a statement that I make constantly to people. Banks are not your friends, specifically the large banks. some of the shining stars in this have been the community banks who have really worked, hard hours, long hours to push, because I think a lot of them had to manually push this paperwork through the system to take care of their people. But who did the large banks really go after? They took care of the big companies, their big customers. A lot of them were telling me, because I was reaching out and finding out who was doing what. They didn't have guidance, but the guidance became clearer and clearer that they were servicing existing customers only. You had to have a business account. You had, some cases, had to have
Right.
debt already. And so the banks were in a way protecting their own interest. So not really going after like the smaller people. They were going after to take care of these big fish. I understand it, but I don't know why we have to keep going back to people, small business owners, entrepreneurs, and telling them like these big banks, they are not your friend. They are not on
The
your
good news
side.
is we started to see PPP loans being funded. We're seeing small businesses that we work with and are associated with getting the funds that they need to hopefully maintain operation and maintain their staff. The other thing too, part of our social fabric these days is, we do have the ability to shame people. And I think in some degree, a lot of those larger institutions have been publicly shamed and are starting to return money or at least pass on it. The big one I wanted to kind of just chat on real quick. I thought this was interesting. So there was a tweet from someone that said, a lot of these is basically talking about some of the largest institutions, higher learning institutions, colleges,
Mm-hmm.
universities, basically asset management firms masquerading as higher learning institutions. And so we know
Right.
that Harvard was approved for I think a $9 million CARES Act some funding from the CARES Act.
Higher education
So
money, something. Yeah.
they rejected it ultimately, but they were approved for $9 million, and I thought this was interesting. So
Oh, they
returned it,
returned
yeah.
it. They
Okay,
didn't
so
reject it.
yeah, returned it. So I thought this was interesting. So that the gentleman who tweeted that out said they're basically asset management firms masquerading as higher education firms, and so I was like, well, let's do. I wanted to do a little digging into that. So I actually pulled up the top list of registered investment advisory firms in the United States and compared that against
Mm-hmm.
Harvard's endowment fund. So Harvard's endowment fund is about $38 billion. $38 billion.
Right.
And so if you,
Yeah. It's probably a little higher back in January.
yeah, who knows, right? But so I found this data on top registered investment advisory firms. So this was from Investment News data. So the
Mm-hmm.
top one was Financial Engines Advisors at $181 billion. Second was Fisher Investments at $94 billion. Third was a group called Hall Capital Partners at $36 billion. So what that means is if Harvard's endowment fund was literally a registered investment advisory fund, they would be the third largest fund or company in the United States. That's just shows you
Yeah.
how third
The
largest
third
RA
largest,
by assets.
how big they are.
Um, that's how big they are and how much money they have. And to think that they would need
Right.
$9 million from the CARES Act to continue operation is it's just laughable. So they rejected it or
Oh, I
returned it,
know.
however you worded it. And a lot of companies have been sort of shamed into rejecting those loans that they've been given, but that doesn't mean that there aren't dozens and dozens that are gladly taking it and potentially keeping that money out of the smaller businesses' hands that really need it.
Well, that's the byproduct of rushed legislation. I mean, they were trying again. They were being forced to act in a timeline that Congress usually does not act. They do not pass things of this magnitude in like 2 weeks. It just doesn't happen unless extreme or extraordinary circumstances. And the people who have advisors, who have access to information, who are, they are going to be ready. And this is why, we always try to tell people it's important, because if you're going to run your business, right? So this is my final thought. If you're going to run your business, and I'm just going to make up something. Let's say that you're in the concrete business, okay? and you know everything there is to know about concrete. You know, you could give me, you know, a 2 hour presentation on all the nuances on different types of concrete and how you should pour it and how you should lay it and how weather impacts it, and give me all the details. You're a supreme technician. That's what you do. You need to have people that are watching your back when it comes to taxes, when it comes to business law, employment law, when it comes to your health care, when it comes to your planning for the future, your finances, your retirement. You need to have people that what they do for a living is make sure people like you are staying on track financially, and that your business is running. Because if you're just trying to wear all those hats, then something like this happens and you're trying to play catch up and try to figure out if you're eligible. The people you're competing against, the big concrete stores, the major suppliers, they already know. They already have the information. They're already in line with their paperwork and ready. And you know, you're left out. And so I think that's a key thing. Technology is enabling a lot of people to be able to play at those levels because of the interconnectivity of it, and people should be taking advantage. The days of trying to do everything, I think, should be
Well,
gone.
this year especially, there are so many changes to tax law, required minimum distributions, the PPP loans that are being funded. They're not. It's not guaranteed that that's forgivable. Portions of it could be forgivable
Right.
if it's used correctly. If it's used incorrectly, you could be creating a disastrous situation for yourself down the road where a large portion of that could be refunded. For example, if you use it to pay off personal debt or business debt, that may not be forgivable. You might end up being, taking
Right.
money that you think is, a grant, and it ends up becoming a loan. And it could end up becoming a loan that you have to pay more in interest on than you originally thought. There are so many changes this year. We've tried to document many of them over the past few episodes, but this is the year to get guidance, whether it's a tax professional, a financial advisor. I just think there's so many areas that the ground is shifting beneath our feet, and we're spending time every day trying to stay on top of it, and it's still a mountain of new data. So this is the year. Get help, especially if you've taken advantage of one of these loan programs. Please make sure you're working with a professional that can guide you through some of those areas.
Absolutely. So we hope that you've enjoyed the show and listen to Ross and I banter back and forth. We always have a good time, chatting about different things. And like anything, we're going to keep churning out these episodes, even if we're doing it from home, because we want to talk about what's going on in the marketplace. We want to talk about what's going on in the economy. If you got any questions or any topics you'd like us to discuss, feel free to reach out to us. You can email us at
Hey, final note, Michael. Final note, Michael. I'm
pmoneyhuddle@vcplanning.com.
going to interrupt you.
You,
Last night was the NFL draft.
what?
We just talked 26 million people unemployed. Jerry Jones does his draft from his $250 million yacht. Man, you got it. You got it, right?
You know what he doesn't have? He doesn't have a Super Bowl championship in the last 2 decades. So I'll lay my head. I don't envy Jerry's wealth, but I think it's hilarious that that franchise
Yeah.
can't pull it together. So, but as always, we love you guys listening to us. Find us on Facebook. Give us a like. Give
See
us
y'all
a
later.
shout. All right.